Greetings. This is Market Wisdom for Traders, Episode 50, delivered by Epi50 for forex traders, stocks, options, crypto, futures, commodities, equities, and any form of chart-related trading. You're advised to subscribe, share, make comments, and ask questions. We are available for training and for account management. We have been on this for about 20 years now, so we have what it takes to ensure consistent profit return on your investment with us. You can contact us on 080-375-97085. We currently reside in Lagos. Typically, the more the street covers a stock, the less opportunity there is. In my opinion, investment vehicles that provide the least short-term volatility often embody the greatest long-term risk. Without significant price movement, you can achieve superior gains. One market paradigm that I take exception to is buy low and sell high. I believe that far more money is made buying high and selling at even higher prices. To be successful in this business, you have to be open-minded and flexible. You also have to be a risk taker because you believe in what you are doing. The mind is like a parachute. It is only good when it is open. What does not destroy me makes me stronger. The essential element is having a core philosophy. Without a core philosophy, you are not going to be able to hold on to your positions or stick with your trading plan during really difficult times. You must fully understand, strongly believe in, and be totally committed to your trading philosophy. In order to achieve that mental state, you have to do a great deal of independent research. A trading philosophy is something that cannot just be transferred from one person to another. It is something that you have to acquire yourself through time and effort. If you reach high, you just might amaze yourself. The Blake calls his management company 20 plus. This name ties into the logo on his business card and stationery, which shows a probability curve of with plus 20% return. True to his logo, he has never had a year with a return below 20%. For 12 years, he had averaged a 45% annual return. Blake's confidence in his approach also permeates his unique fee arrangement. He charges his clients 25% of total annual profits. He also usually agrees to pay 25% on any losses and 100% of losses incurred in a new account during the first 12 months. It was the simplest approach that proved the best. We called it the one penny rule. In the 2 years worth of data we had obtained, we found that there was approximately an 83% probability that any uptick or downtick day will be followed by a day with a price move in the same direction. Eventually, this pattern started to go away, as most of these things do. I discovered that the technology, oil, gold, and utility indices were each significantly less random than the broad market index. Generally speaking, I found that a price change that was larger than the average daily price change in a given sector had anywhere between a 70 to 82% chance of being followed by a move in the same direction on the following day. I found that I could sample 10 or 20 stocks in each sector and get a very good idea where that sector was going to close that day. This observation allowed me to anticipate the signal by one day, which proved to be critically important, as my research demonstrated that the average holding period for a trade was only about 2 to 3 days, with approximately 50% of the profit incurring on the first day. This brings us to the end of episode 50 of the Markets Wisdom for Traders. Remember to subscribe, share, and ask questions. Contact us for training and account management. You can reach us on 080 375 97085. Thank you.